as I explained, right, that 200K is not out of the question because it's May. We have about other 7 months by the end of the year. Usually, now, can the peak happen in January? Yes, right. There is no anything written in stone that says, oh, we need to have a. Usually, there are reasons. Like, for example, many companies they do their book keeping at the end of the year, right? So for tax reason, maybe there is a reason to have the end of the year as a reference, right? And this is historical what happened, that we had all the peaks just before the end of the year. So this is where I focus on saying when we are going to have a peak, if we have a peak.
As the crypto market heats up, all eyes are locked on Bitcoin's next price target. While some analysts forecast a steady ascent, others anticipate a parabolic surge, and a $200,000 price tag isn't just wishful thinking. The stage is set for a potentially historic move, with institutional money flooding in through ETFs and global adoption reaching new heights. Giovanni Santostasi, a renowned Bitcoin analyst, highlights the critical role of timing. Historical trends suggest Bitcoin typically peaks toward year-end, but this cycle could defy expectations. Corporate financial cycles, tax strategies, and market psychology all influence the trajectory, and past bull runs have delivered explosive gains in the final months. Bitcoin's price movements aren't random, they follow a precise mathematical rhythm. Giovanni's model reveals Bitcoin's power law core, where price typically oscillates between key boundaries. The model accurately predicted past surges and now points north as Bitcoin enters its explosive, turbulent flow phase. With institutional demand surging and historical patterns aligning, this mathematical framework suggests we're on track for a historic year-end rally. The numbers don't lie. Bitcoin's next big leap may be its most spectacular yet. Let's watch clips from Giovanni Santostasi's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
So this is what we call bimodal Bitcoin, and it shows a few things. First of all, the blue line, it's the major power law, right? What we call the reference power law. It's supposed to be kind of a compromise, right? You see between the peaks and the bottom, right? And there are different ways that you could calculate what is called the fair price of Bitcoin, but that is what we consider at the moment probably one of the best. It's like this regression that we do using this idea, right, of taking the log of the price and the log of the time. It doesn't look like a straight line in this graph because it's a log, what is called a log linear chart, right? I take the log of a y, I take the x of a time, and it looks curved. But if we were plotting this on a chart where the log, we take also the log of the time, it will look straight. That is the main thing, that this linearity means something, right? This is the important element of the power law. And I extend a little bit to show you where we are going. And the main feature of this chart is that there are two regions, right? By the way, there is also this bottom. This bottom, we believe strongly it has to do with the cost of production of Bitcoin. And look how amazing it is, right? It can catch all the main bottoms, like even during COVID, we didn't cross that line. It's something that you can calculate in different way, but usually it's about 60% from the middle line. Probably this is the real power law, or all the data between the blue line and the white line is what we call the core power law. So we usually spend 2 years, right? If you look at patterns from the past, and the question is still there: are these patterns broken? Right? Because some people started to say we don't have a cycle anymore. I always say it's too early. Yes, it looks different from other cycles. We can look at some of the chart to compare in a moment. But the main thing is that during the bull run, right, when the bull run starts, like I say, we spend 2 years at the core. And the core is not even the support. The support actually is kind of an extreme relatively to where we spend most of the time. We spend most of the time in this region between the blue and the white line. So, some people that don't understand the power law, they say, oh, it's so wide, it can be anywhere. We never say that. Really, the core is almost scarily precise, how close the price is to this core. And you can see these are the deviation. This color green show the line in the middle is the mean, where we usually are, and the price oscillates around there. And the green shows the different range of deviations during this time. Usually, when we leave a core, and I made a prediction, I said, this was like all the way to April of last year. I say, as November comes, guys, get ready for the bull run. And I even predicted the price within few $100, right? Talk about prophecies. But I did it with math instead of talking to the aliens. And, I was right, because this is what happened at the end of the year. We were there, right? We had this bull run, and we went in this, what we call the turbulent flow. The turbulent flow, the power law is still there, because you can see this red line is where the power law is, but it looks shifted. And it looks shifted because the distribution of the values is long-tailed. It tends to be larger for large deviations. So it's not symmetric like the one in the core. It tends to have larger events for positive values. And this is why we go. So it really explains why we have bubbles in the first place. It's power law plus a lot of turbulence, right? It's almost like we go to this turbulent flow in a air, when you're flying or something, and you get a lot of shaking. But it's not symmetric shaking. It tends to shake things up to actually when we reach the tops that are, these are large deviations from the trend. These darker areas, you can actually tell where they are going to be. You can identify them, and this is very important, because if we go back to this region, we can use this indicator to tell us when we are too far, and maybe there is a correction. Because if we go to this dark area, we will have a correction. And look at this, there is like a sliver of red there. You see how there is a sliver of red? Because today we just crossed this region and we went back. It's not necessarily just the power law. We have a more sophisticated method. It's called Markov chain, and it finds the two regimes. Actually, I should add a third regime that is like in between. We have this between area, and so this is very nice, because we left this turbulent region. It never happened before, at least for so long time. It happened only once here, where we went to this green area when we were supposed to be in the red area, but we did it very, very, very short amount of time, and then we went back. We never had an extended region like this. This is why, it does look different, this cycle, from others, because, we had this correction, we stay there for a long time, but now we are back. Now, is he going to stay back and reach and see? This is the target. I have a target of 200 that is here in this, and it's not really one single point. I wrote a little bar here because it's always a region, right? So it's a region in the last quarter of a year. It doesn't look that crazy, right? Now we have a hope to reach there. Now it needs to be pretty consistent gain. I calculated 0.39% per day, every day, in average, right? To reach that. It's pretty intense, but to give you a reference, last cycle, we went something like 0.45. So, we will need to do for the end of the year, more or less what we did during the last cycle. And then actually slightly less. And then we will reach 200. Where do I get the 200? I get the 200 from this. Let me show you the other indicator when I superimpose on it. So this one, right? So you can actually calculate so while the power law doesn't tell us where these bubbles are going to be, you can use the power law as a reference and then calculate how big the deviations are from the trend. And it turns out they decay. You see this yellow band on top, right? This yellow band, this yellow channel represents this decay. You see how it follows the decay? So I use a formula. There is a formula. That is the beauty of Bitcoin. There is a formula for everything. So there is a formula that tells you how fast this decays, and you derive it from how big the deviations are from the power law, and they seem to decay in time. And then you can extrapolate the decay mathematically. There is nothing drawn by hand here. This is the beauty of our approach. We different from other people that are all these technical analysis that is all drawn by hand. It's all math. And so you can calculate this decay and project it to the future. And this is what you get. You get 200.
Global liquidity trends suggest Bitcoin is gearing up for its next major move. Historical data shows M2 money supply leads Bitcoin price by about 85 days, with a 70% correlation to upside moves. This alignment, combined with power law projections, paints a bullish picture. This isn't speculation, it's math meeting momentum. The fewer believers now, the bigger the potential upside later. With liquidity rising and models converging, this cycle's peak could surprise even optimists. With powerful fundamentals now in play, Santostasi's models point to a dramatic climax, one that could rewrite the rulebook. Will 2025 follow the script or deliver a surprise twist? One thing's certain, the months ahead will be anything but predictable. Buckle up. Bitcoin's next big move could redefine the game entirely. Whether it's a steady climb or a moonshot to $200,000, the coming chapters promise to be unforgettable. The countdown is on, and the stakes have never been higher. Let's watch more clips from the interview.
This chart is more about global liquidity. So it shows basically this indicator is one of the main indicators that I have. In this case, what I'm doing, the purple line here is the global liquidity, mostly M2. You can try to find more sophisticated form of liquidity, but M2 works good enough. And the trick here, this is why you see this, you see how is extended to the future, right? So many of you probably are familiar with this idea. The main difference between this chart and others that you may have seen is that I don't plot liquidity by itself. So this is where the price ends, right? You see here. But this is a model of a price based on the liquidity. So it's a little bit better because I'm actually using the relationship between the price and the liquidity to make a model of a price, what the price is supposed to be according to this relationship. And this is what you're seeing. The green line is kind of smoothing. I smooth first and then I fit later, right? It's not just smoothing of the purple line, but then basically the two are in agreement. And you can see how if we took this seriously in December, we will have known that we were going to be a correction. I was looking at it, people were talking about it, but I was not yet convinced that this thing is there. And I did a lot of study. I never do just, it looks like that. I did a lot of statistical studies. And actually, yes, like 70% of the time, when global liquidity goes up, the price also goes up, about something like that. It's a little bit less when we go down, like something like 60%. But there is a strong correlation between these two things. And if it continues, it's crazy, right? Because we are going to have a run up. And look at that. Marcus was talking about 110, 120, right? If we really go across the first liquidity level. And the model predicts more or less the same. Again, around the same range of July, August. So it's really cool to see all this convergence. You never want to rely on one single indicator. You want to use many. And when we have a convergence of many indicators pointing all in the same direction, you have a little bit more confidence, right? So it's really cool. This one is mostly showing the winning rate. So it's a way of looking at, basically an oscillator. So the orange is the liquidity. The reason why we can project in the future, again, many of you are familiar, maybe some of you don't know, is that it looks like there is a delay between the liquidity and the price. People debate what this delay is. I found 85 days based on all my statistical studies to be optimal for delay. It's never one precise thing. It could be 90 days, 100 days, but there is a delay. And that is cool because you can look ahead and tell where we are going. It's not, I will not take it as, oh, it has to be 100%, but it's very nice to see all this convergence, including this, right? That there is a lot of liquidity, and Bitcoin seems to follow very closely this liquidity. 200K is based on this decay, like I say, 80% deviation from the trend. Only by power law alone, if we continue to follow the power law that we have done very closely all this time, we are going to 130. And 80% plus 130 gives us 200K. Now, it's not impossible because, like I say, that will mean about 0.4% every single day. And Bitcoin has done that last time. And of course, these cycles are, the volatility is smaller with time. But, 0.4 is smaller than 0.45. It was the average return last year. So it can be done. It's challenging. Now, 150, 180, it's within that. Think always about ranges, right? Never think about one single value. If somebody gives you 444, right, it's full of crap because maybe you got it right once, but the next time is not going to get it right. Believe me. And it's always a range. So 180, 150, it's more likely than 200, but 200 is not out of the question, So this is my position on that. It's a little bit, from what I understand, it's a little bit like predicting weather, right? And it's not that people think predicting weather is just, bullshit. It's not. It's not. Right?
The seasons, not the days. Yeah.
You can tell, okay, we are approaching summer, right? Mm-hmm. There are all these signs that the temperature is going up, etc. But the local weather can change, right? Because it's more difficult to predict that, right? It's just that in general, we are seeing where we are going. If there is an update like this, okay, because the market can go up or down, right? But when it goes up, when you start to see how strongly up is going, right? So it's still probabilistic, If we had a way of predicting 100%, what will happen if we had a way of predicting 100%? The market will be flat. It's actually a good thing that it's not predictable 100% because otherwise there will be no leverage for us. Actually, I heard yesterday Andre Jik, that guy that made me famous. He had a good point. He was saying, why Bitcoin is still such a good investment? Because so many people don't believe on it. Yeah. If everybody believed in Bitcoin, Bitcoin will be flat. It will be flat. It will be over. And so actually the fact that we are still few of us, it's what makes this thing go up because there is still uncertainty, there is still game there, for things to move up and so on. And we are the ones that we are on the side of history. When I invested 13 years ago, many of you were not there. It's not because I'm better than you, but, I was taking a risk, I was taking a huge, big risk at that time. And that I got rewarded because I was taking that huge, big risk. I could have lost everything. So I think this is a perfect time for being a Bitcoiner because your risk is so small. I think it's actually the most solid investment in the entire world. I would not want to put money in anything else. But everybody else in the world, like 99% in the world, doesn't know that. You know it, they don't, and this is what makes you good investor and clever person because you're going to take advantage of this. This is the power of Bitcoin, but it's still something that many people don't realize, they don't trust,
As Bitcoin approaches its all-time high near $106,000, analysts are examining the powerful liquidity forces driving its price action. Researcher Giovanni Santostasi has demonstrated Bitcoin's strong correlation with global M2 money supply, typically following liquidity movements by about 85 days with 70% accuracy. This relationship now suggests significant upside potential in the coming months. Current models indicate a baseline target of $130,000, but the real excitement lies in the potential for $200,000 if Bitcoin maintains its historical 0.4% daily growth rate. These projections align with today's macroeconomic landscape, where spot Bitcoin ETFs have attracted $2.8 billion in May inflows, while inflation concerns push investors towards scarce assets. The market's current skepticism may ironically fuel further gains. Santostasi notes that Bitcoin thrives when uncertainty persists, as doubt creates the volatility that enables dramatic price movements. With expanding liquidity, growing institutional adoption, and multiple technical indicators converging, this cycle could surpass expectations. While $150,000 to $180,000 appears the most probable range, the same liquidity patterns that accurately predicted Bitcoin's recovery from the COVID crash now suggest $200,000 represents a mathematically sound upper bound. As traditional markets grapple with inflation and shifting trade policies, Bitcoin's liquidity correlation positions it for potentially historic gains. The stage is set for what could become Bitcoin's most impressive bull run yet, proving once again its unique responsiveness to global monetary conditions. As we wrap up, do you think Bitcoin will hit $200,000 this cycle, or is $150,000 more realistic? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.